Hello everyone, my name's Andy. My channel is Finding Value. If you like making money, subscribe to the channel. I talk a lot about undervalued assets and investment opportunities, particularly related to commodities, just because that's what's in cycle right now. So this presentation, I'm going to cover inflation hedges and oil. Oil is the greatest inflation hedge. It has been in the past, and I think it will be in the future. And other energy related, something like uranium, is also a very good inflation hedge. So I'm going to go over a quick brief thing of inflation hedges, and then I'm going to show you a setup in oil. So let's dive in the presentation we've got on inflation hedges and oil. So some major developments are happening right in front of us right now. We have a falling wedge pattern that is about to break to the upside for oil. Oil is the largest hedge against inflation. We have demand coming back for oil. We have a supply deficit of oil, I think, going into the future, which will pull oil prices higher over the years. Take a look at all of this from a big long-term perspective, not from a month or two. Look at it from a decade-long perspective. Again, this is only financial education and not advice. Just want to make that clear. So the first thing I want to touch on are inflation hedges. So when consumer prices accelerate, copper tends to rise 3 times more than gold. Here's the CPI, the S&P 500. This is gold, other precious metals, agriculture, industrial metals, broad commodities, copper, which is a very good inflation hedge, and then energy. Energy. Now, I want to go into some sectors here just to let you guys know this is U.S. inflation sensitivity metric for equity and commodity sectors. This is the U.S. equity sectors from 95 to 2020. Energy has done very well for inflation. Infotech, utilities, industrials, commercial service, materials, MSCI USA, etc. down here. I have real estate being negative here. GSCI, commodity sectors from 83 to 2020. They have GSCI, that's a global soft commodity index, I think. Base metals, energies, precious metals, agriculture, and soft goods. So energy is a good one to be in. Now I'm gonna get into this falling wedge pattern here. This is going into looking at oil and having it being the greatest inflation hedge. It will tell us if we're having inflation. And I'll look at a couple of other things in terms of not just oil price, but yields and dollar. So this is a falling wedge pattern. What this is this is price, the black line here. Price comes down. And again, we don't know these trend lines exist. This is just from a market psychological standpoint. Basically, herd mentality. It creates this pattern. The herd does, humans, over time in a falling wedge pattern. This falling wedge pattern can be seen when you chart it out, and then we look for a breakout to the upside. This wedge pattern is slanted downward a little bit, and we've got the upper resistance level slope line, and then the support level slope line is the green line. We've got these two lines that converge to a point at the end, and we break out as this thing coils up for a breakout. So basically what this is telling us is that the buyers are equaling the sellers over time in this declining wedge pattern as the buyers and sellers start to equal each other more and more and more until we get a breakout where one side wins. Here's the oil price. This is from a very big picture view, 1950 till today, $20 to $160. This is not adjusted in any way. This is just price over time. I drew a top trend line in, a big old one. And I drew a bottom trend line. It's trading between this wedge pattern. This is a megaphone pattern is what people talk about it because these are close together and then they grow far apart. In this megaphone pattern, we can see that there's a declining wedge that's forming right now where the buyers were starting to equal the sellers over this time. And we're about to break to the upside here. We're right there at that top pattern right here. Let's zoom in on this pattern to get a little bit better view on the next slide. And I've got this star up here. You can barely see it. That's the projected price of this trend line going up. It's off the page of where this price could potentially go at the end of the bull market. That's what that star is, and I think it's going to go somewhere towards the top of this line here. So zooming in on this falling wedge pattern, this is what it looks like when you zoom in on it. It's crude oil. We draw one trend line here, then we draw another trend line that hits this one, and then these guys down here, you can draw it. It broke out of the first guy here, and we are attacking this. We're going to attack this big trend line right here. That's what's next. It's on our radar. We've got our eyes set on it. So let's zoom in again on this portion right here to see what it's going to do in that area. So we zoom in, and hey, look, it's another wedge pattern. This is a wedge within a wedge within a gigantic megaphone pattern. So we're looking at all these patterns as we zoom in. Megaphone to wedge to another wedge. We're bouncing back and forth. We've got nice support here. Popped up to the upper support. Pop down. And look at this. We're hitting our head right on this upper chart pattern here. I'm looking for a break here. We could break and then move sideways for a while, or we can just, monster on through it. But that's what's staring us, right now in our face right here. We've got this pattern. We're right there trying to break out. Now I'm going to look at the dollar. The dollar declined last commodity bull market. This is 2007, 2008. 2008 was the peak. Just so happened that the dollar also bottomed at 2008. We pulled up during the recovery phase of real estate. And then, boom, we broke back out to the downside. I think this is commodity bull market game on. And remember the slides before, oil is the biggest inflation hedge against the dollar, or the hedge against inflation. So the dollar is declining. It is saying we're having inflation. And we're seeing that confluence with the price of oil moving higher. So that's good. Now, we should be seeing yields going up. We've got yields going on up. Looks like we broke this downtrend and we're moving on higher. It was up 3% today. I don't think this bodes very well for gold and silver. Remember, they work off of real negative rates. And for some reason, people think that increasing yields is affecting gold and silver. We don't really know what the real rate of inflation is, but copper and oil have done fantastic when this has increased. So I do think inflation's out there, and I think we're going to see it with oil going up and copper going up. And we're seeing that with those two commodities. Here's a long-term look at the oil to TLT ratio. TLT is the 20-year bonds, and this is oil. And I'm just charting this out. We hit our head on it. And I think we're going to see a vast outperformance of oil in relationship to bonds. So oil, I think, is going to outperform bonds. I think it's going to outperform gold. It's obviously priced in dollars, and dollars, I think, are going to go down. So I'm expecting oil to do very well over this next commodity bull market. In fact, I expect it to be one of the best performers over the bull market. And if I were to take a wager at it, I would say that oil and uranium will do fantastic over this next bull market, and those two are going to race each other for one of the best commodities. I also think copper is going to do very well, and that could also be in the front runnings, given the renewable and EV push. So this is what I see there. So I'm looking at some of the companies. These are what I think are some of the best opportunities. Again, this is just my opinion. This is financial education. You guys are going to have to do your due diligence. But this is what I see on the chart pattern. What I'm seeing is a similar pattern is happening on this side, which is forming on this side. You could consider this maybe a large cup and handle pattern. You could even consider it a shoulder, a big head, and a shoulder that's about to break to the upside. Either way, you project this guy here on top of the shoulder pattern or on the cup. It's the same way of projecting it. It doesn't really matter what it is, and it doesn't have to be clean either. This is the projected move on a logarithmic chart. I don't know the time frame of this per se, but the projection is quite high. It is off the charts. If I don't know how high this thing's going to go, but if we see a big move to the upside, which I think we will, I think we're at the bottom of this handle. If you look over here, it was a little bit lower. It went down to about $3. This is a little bit higher, but it looks like we're putting in on a weekly candlestick basis a bullish engulfing of the one before it. And if this week ends strong, if we end a little bit higher, I think we're going to end the week with a bullish engulfing. What does that mean? I think it means that we're going to go on up and create this handle. We might pause here, or maybe we blow through it, and we're going to move on up. A very large move over maybe the next few years is what I'm seeing. Here is SM Energy, another one of my favorite plays, and it's exhibiting a similar pattern. We have this kind of cup formation and the handle forming. This thing is ultra strong. It was a little bit higher than this side, and the handle's not really pulling back. It's just moving sideways. So that's another one that I like. And Callon Petroleum. Callon Petroleum, if you look, I have the circles here. It kind of came down. You know, the same kind of pattern is forming over here, this kind of pullback. Obviously, these things aren't going to be exactly the same, but they mimic each other and they mirror the same move. I put at the bottom here that this is roughly the bottom, and we're right pulling back to that bottom roughly. And we're seeing some support and pulling back up. And I do think this is a cup and handle type pattern where we could see a nice big move to the upside. Another thing that you could think of this is that if this COVID problem never happened, that we would be roughly in this area right now, and we should maybe be moving up already. So you could look at it from that perspective as well. Again, going back and refreshing your guys, oil is one of the biggest inflation hedges. That's what it's seen in history, and I think that's what it's going to be going forward. When we tie this stuff all together, if we're going to try to do this renewable path, and we're already entering a deficit of copper, and today I went over a lot of the relationship of ore grades to energy consumption. If we're going after lower and lower ore grades in copper, our energy demand will go up for mining, and it could go up exponentially. Energy is a great way to play this entire mix with the copper demand going way higher than we've ever seen, at least from a worldwide basis on a renewable electric vehicle basis, if they can even get the copper for those vehicles. So I think there's going to be a large demand in copper, which will be a large demand in oil. And oil is our biggest inflation hedge, and we've got a declining dollar. This is like every single star aligning. Now, there's also another thing that happened to oil. Oil during the COVID crash went negative. Negative. Do you think oil companies did very well during that period? No, they did absolutely horrible. They had to cut back supply. They had to cut back their spending on everything. And guess what that's going to do? We are right at the beginning of a commodity bull market. If we are going to expand our commodities, if we're going to expand real estate and new housing starts, that is an increase on energy demand. All of it is. At the beginning of the commodity bull market, you screwed up the oil price, which COVID did, or shutting the economy down, not COVID, but whoever shut the economy down did this. And they are creating the largest opportunity in oil that I've ever seen. And the reason being is that the supply has gotten crushed from a worldwide perspective. The prices went so low that I think it crushed oil, shale oil. It crushed a lot of oil around the world that is higher cost. A lot of Canadian oil, tar sands type stuff. They really had to cut back spending, which is going to cut back supply. So what I am proposing is that with these chart patterns, with the dollar where it's at, with oil being such a great inflation hedge, I think that oil is going to have an incredible run during this next bull market. And when you look at the charts, the projections are way up there. I don't know the exact projections, but they're probably going to be in the multi-$100 per barrel at the end of this cycle. If you guys like this content, give me a thumbs up. Let me know what you guys think. Put it in the comments section. Love to hear your guys' opinion. And thank you for listening. This is Finding Value.